Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we're going to be joined by the COO and co-founder of TeraWulf, Nazar Khan. He's going to be giving us an update on 2024, including their debt repayment strategy, their growth in terms of exahash, and an update on construction at their Lake Mariner facility. But before we get into all that, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below if you're currently holding shares of WULF, what your outlook is for 2024, and your price target in terms of Bitcoin heading into April's halving event. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we've got a special guest from TeraWulf. We've got Nazar Khan, who's the COO and co-founder, here to give us an update on their business. Now, TeraWulf has developed quite a cult following here, very similar to what we're seeing out of the Marathon Group. So it's exciting to follow this story. WULF is one that we've been covering for quite some time on the channel. So thanks for joining us today and looking forward to the discussion.
Thanks, Bryce. Great to be back. Happy New Year.
Happy New Year indeed, yeah. Now, no shortage of news to kick off the new year. We were just talking about the ETF approval prior to starting filming here. But before we get into all of that, can you give us a quick update on TeraWulf as an organization for people who maybe aren't super familiar and kind of some of the recent developments?
Sure. TeraWulf is a zero carbon Bitcoin miner. We've got two sites. One is in upstate New York, the Lake Mariner site. We're running 160 megawatts capacity at that site. We're ramping that up as we speak. And we have another site in Pennsylvania. We're on the site of the Susquehanna nuclear facility. That facility is called Nautilus. It's a 50 megawatts. So all in, we're 210 megawatts of capacity in operation, 7.9 exahash. That will be online here, within the next couple of weeks.
Right on. Yeah, Lake Mariner is one we're looking forward to getting an update on and a few questions here. But I know the December production results just came out. That's fiscal year end, calendar year end for a lot of the companies as well. So can we just walk through that quickly, give us an update, some of the highlights from December and what you feel the strong points were for 2023?
Sure. We mined 334 Bitcoin in the month of December across the two sites. We mined 3,400 Bitcoin for the entire year. We started the year, 2023 was an important year for the company. We started the year at about 1.5 exahash of operating capacity on Jan 1. December 31st, we ended at 5.5 exahash of capacity. Most of that growth occurred at that Lake Mariner facility. That facility is unique. It's about 25 miles away from Niagara Falls. And so it's got a tremendous amount of hydropower that supports that facility. Lake Mariner is also the site where we see, meaningful growth, both in calendar 24 and beyond. That site's intended to be 500 megawatts over time. At this moment, we're about 160 megawatts capacity. We think we'll get to about 250 megawatts capacity at that site in calendar 24 and 500 megawatts capacity at that site in calendar 25. And so that's, a very important site for us and where we're going to see quite a bit of growth, as the TeraWulf portfolio continues to grow.
Yeah, great. And that's where I really want to shift the conversation now. It's cool you called out Niagara Falls. That's where the family and I went for vacation this summer. So I'd highly recommend that as a side note. But in terms of the facility itself, I know currently Building 3 is kind of the focal point. So I'd like to get an update on Building 3 and then we'll start talking about Building 4 and future plans there.
Sure. Building 3 is about 43 megawatts capacity. Building 3 is complete. We have completed the construction on Building 3. We put an order in for the S19 JXPs over the summer. Those have all arrived or should be arriving here within the next week to 10 days. And so Building 3 is the miners being racked as we speak, and we'll be at a full capacity at Building 3 within the next week or two here. So we'll hit that 7.9 exahash. Again, within the next couple of weeks here when Building 3 is fully operational. But, again, from an electrical perspective, it's fully there. We're in the process as we speak of racking miners. If you go on social media, you can kind of see, some of the pictures, on every day we're posting pictures around the rack, the miners going into Building 3. But that's, again, electrically complete and we're racking miners as we speak.
Okay, great. And you say that'll get you to the 7.9. I know the next milestone on the roadmap is the infamous 10 exahash, getting into the double digits, which is super exciting. Anthony and I were talking about how much this industry has grown as a whole, and seeing people starting to hit these double digit milestones. So that's kind of the next one. The cool thing about this forum, Nazar, is we were actually able to get some questions from the audience. So Anthony and I had posted this in a few discussions and chat rooms, and people were curious in terms of building 4 and beyond. How does your company plan to finance that growth?
Sure. So just on building 4, we've already poured the foundation for that building. Building 4 is targeted to come online here in mid-June. With the capacity of building 4, as you said, that mythical kind of 10 exahash, we will hit that with building 4. Good news, we have, fully funded the CapEx for the infrastructure for building 4. We have not put a minor order in yet, and, we're working on that. And so as we think about, kind of funding growth going forward, I think it's important to just touch upon, the balance sheet first. We made a pay down on our debt last quarter for free cash flow. $14 million of free cash flow we generated went to pay down debt. At this moment, our principal balance is $128 million. We see that principal balance kind of getting down, below $100 million by mid-April. And we're targeting to kind of bring that debt balance, to $50 to $75 million by year end. And so, you're seeing that, yes, we have debt, but, the business is, generating a fair amount of free cash flow, and that free cash flow is being used to kind of meaningfully pay down that debt. In the second half of the year, as we kind of get to that $50 to $75 million of principal balance on the debt, we'll be looking to either refinance it or kind of, refinance that debt, which will allow us to kind of recycle some of the capital that we're generating from the business as well to put into the business. And so, we think with funding of CapEx is going to be kind of a mixture of both kind of free cash flow from operations as well as, further, issuances on the equity. But it's a combination of those two that we think will, continue to, we'll be able to invest into the business.
Yeah, I appreciate the transparency there. Obviously, the debt situation is one that a lot of people are curious about. The interest rate environment is changing and so dynamic, as we know. So with the near-term debt, it's nice to get a bit of a strategy update there. So appreciate that. The other thing that a few people have been asking about, aside from the self-mining component here, the AI HPC, we're starting to see this become a lot more relevant to many of the publicly traded Bitcoin miners. What's the strategy or outlook on that side of the house for this year as well?
Sure. As on the TeraWulf side, we've been in the infrastructure business for 25 plus years, developed, owned, operated, built, capitalized infrastructure assets. And so as we got into Bitcoin mining, the thing that attracted us most to it was, again, Bitcoin mining, we think is principally infrastructure, right? It's energy infrastructure. You're converting a kilowatt hour of electricity into hash. And so Bitcoin is, again, one form of compute and one form of data, if you really think about it. And so as we think about these other applications, it's not really a different business line. It's, again, extending upon the very same expertise that we have with respect to infrastructure, but directing, kind of that conversion of that kilowatt hour of electricity from a hash, for Bitcoin into some other kind of form of compute. So what we've done is we've kind of dedicated in the near term 2 megawatts of capacity to kind of the AI HPC side. We're in a number of discussions with different counterparties around use cases for that. And the way that we've kind of structured this initial 2 megawatt target is to kind of set up a format of how a larger growth plan could occur. And so that includes kind of designing and building the infrastructure that they'll use. So again, the infrastructure that's needed to operate an AI or HPC data center is different than the traditional Bitcoin mining. So one is just kind of depending upon the use, what it is we're building for them and working together to design that at the site, and then developing a roadmap to kind of grow into over time. And the density, the capital density, right, per megawatt on the AI HPC compute side is significantly higher than Bitcoin mining. And so once you factor in kind of between both the infrastructure as well as the chips, the kind of the GPUs associated with that, you're talking about anywhere from $6 to $10 million per megawatt of CapEx, per megawatt. And so the power, we have the ability to grow. And as I mentioned earlier, at the Lake Mariner site, we've got 500 megawatts capacity. And so adding in 20, 30, 40, 50 megawatts of AI to HPC compute in the near term is something that's very feasible and doable. And again, so we're looking at this 2 megawatts as a way to establish that. And we're hoping to kind of get that here announced, within the first half of the year. And then the second half of the year will really be about taking that 2 megawatts and really then building it out to a larger scale.
Yeah, I like that test, learn, scale approach, especially when you've got room to expand like that, and gives you the flexibility and the levers down the road to really scale up or down, I guess, depending on the price of Bitcoin. So I like that approach. I'm glad that we had some questions about that as well. Now, the next one is in terms of near-term catalysts for the stock or the company. We've talked about the exahash growth. We've talked about some of the alternate revenue streams. Is there anything else, Nazar, that maybe we're missing here or that should be on people's radar?
Yeah, I think we touched upon this earlier. The only piece that is, the pay down on the debt, right? Again, we generated $14 million of cash flow in the fourth quarter last year. That was at 5 exahash of self-mining. We're going to be at 7.9 exahash of self-mining here within the next couple of weeks. We do have the halving coming, but that's kind of a second quarter event. And so again, in the first quarter of this year, we should be generating in excess of that amount of free cash flow in the business. And so the business is generating a fair amount of free cash flow. And so in looking at that free cash flow number, I think it's also important to kind of put that in the context of the quantum of debt. And again, we think, the amount that we have is very manageable. Especially once we get to that 10 exahash level, the ability for that debt to be paid down in a relatively short period of time, given kind of that 10 exahash with the economics that we have. We've got, some of the lowest cost of power. We have a very efficient fleet of miners. And so once you put those things together, we think the business, in and of itself will be able to pay down a fair amount of that debt. So that's one kind of component to it. The second, as you mentioned, is just the growth. We have the ability to grow. Again, Lake Mariner, we think is a tremendous site. We are targeting to have about 250 megawatts of capacity operational at that site by year end, and then 500 megawatts of capacity operational, at that site by year end 25. And so if you start to put those numbers together, we're not, we should, get from that 10 exahash, to the high 20s, by the end of 2025. And so that's the other thing that I think, people may not fully appreciate is just the amount of embedded growth that we have built in. Again, we haven't really announced a clear plan on that. And part of it is just, things take time. But the other piece of it is just kind of, we've been stepping through things. And the thing I like to tell people is kind of going from 0 to 5 exahash is more difficult than going from 5 to 25. And so now that we've kind of crossed that 5, exahash threshold, I think, our ability to go from 5 to 25 is going to be, that much easier, just given, all the work that's gone into it.
Yeah, it's exactly like we just talked about with the learn and replicate model, right? And the other thing that's really nice about TeraWulf is the vertical integration. We're starting to see some of the bigger players now kind of shift towards that strategy as well, which is great that you already have that in place. The other thing that a lot of people I think don't understand is, yes, the halving's coming up. It's going to make the block size or block reward less fruitful or cut in half. But with transaction fees the way they are right now, there's a big offset. And the other thing is, depending on the price of Bitcoin, you're either going to have a high price of Bitcoin and a higher global hash rate difficulty, or a lower price of Bitcoin, but then you're going to have a lower overall difficulty. So there are a couple other variables there, Nazar, and I'm sure you guys are well aware of them. But I think some of maybe the retail investor folk just feel like the halving is the end all be all when there's some other dynamics there.
Yeah, and it's interesting, Bryce. If you look at calendar 2023, we had 2 periods where transaction fees really were a significant driver of revenue. Kind of in the May, June timeframe, earlier in the year, and then towards the tail end of the year. And if you look at what that meant in terms of a percentage of block reward, kind of over the course of the entire year, that number was, I would say, 3 to 4 times, what general forecasts were kind of in the beginning of calendar 2023, right? So if you had asked, most analysts early in 2023, what's your forecast for transactions fees for all of 2023? They would have given you something like 2 to 2.5%. And, over the calendar 23, we ended up at multiples of that. So to your point, there are different levers here within the business. But what makes this business, I think, kind of both fun and also challenging is between the network hash rate, price of Bitcoin, what's happening on a macro scale with respect to power, right? I mean, things happening on a macro scale do have an impact on gas, which has an impact on the price of power. And then with respect to now how that base layer, the Bitcoin layer is being used, with respect to, transaction fees, ordinals, and different things like that. I mean, you have a number of different opportunities here. And so that's why we remain extremely constructive on Bitcoin. We're talking about the ETFs. People are generally disappointed a week out, but I say, hey, we're literally 1 week out. And so the real value or kind of driver that we see over time is that there's going to be a significantly wider breadth of an investor base looking at Bitcoin and investing into Bitcoin. And that doesn't happen in 1 day or 1 week. It happens over months and even years, right? And so I think that really starts to build upon itself. And that's where, we continue to believe that scaling our business and being a critical and core component of the overall network hash rate is an extremely valuable endeavor, given the role that we see kind of Bitcoin playing in more broadly as well.
Yeah, I couldn't agree more. And you hit the nail on the head with the amount of variables and dynamics in this industry, plus politics and geopolitical stuff and Wall Street and all the rest. It's nearly impossible to predict and understand all the different influences, but it does keep it fun. It does keep it interesting, to your point. So great discussion today. I really appreciate the time. As always, I'll kick it back to you for any closing thoughts, but very enlightening, and I appreciate the discussion.
No, thank you, and thanks for for all the work that you and Anthony do. And we're excited. 2023 was, as I said, we kind of ramped up meaningfully in 2023, and we're expecting similar ramp in 2024. And there's a number of different things on the front on our side, and so over the course of the year, we hope to to roll those out. So we appreciate again all the work that you do, and we appreciate all the support that we do have. As you said, we've got a decent following, and so all of our supporters, shareholders out there, also thank you, and we'll continue to every day kind of get at it, and hopefully build and grow this business.
Awesome. Wolfpack, that's what we're calling them now, Nazar. Wolfpack, feel free to leave a comment below. If you guys aren't subscribed to the channel, feel free to join the community. We'd love to have you, and we'll see you in the next video. Thanks, Nazar.
Thank you, Bryce.